Real estate or stocks? Where is smart money really going in 2026? For years, buying property was considered the ultimate path to wealth. But now, with AI stocks exploding, mortgage rates staying high, and the economy changing fast, investors are starting to rethink everything. Some people believe real estate is still king, while others think stocks could massively outperform over the next decade. So which investment is actually smarter in 2026? In this video, we're breaking down the real opportunities, the biggest risks, and where wealthy investors are putting their money right now. And trust me, the answer may surprise you. Welcome back to the channel, where we talk about investing, wealth building, and financial freedom. If you want to stay ahead financially in 2026, make sure to subscribe and turn on notifications, because this channel is all about helping you grow your money smarter. Now, let's dive into the battle of the year: real estate versus stocks. Let's start with real estate. For decades, real estate has created massive wealth. People love property because it offers three major benefits: cash flow, appreciation, and leverage. When you buy a rental property, tenants can help pay off your mortgage while the property potentially increases in value over time. That's one reason many millionaires built their wealth through real estate. And even in 2026, many investors still believe property is one of the safest long-term investments. Why? Because housing will always be needed. Smart investors are focusing on affordable rental markets, growing suburban areas, and cities with strong job growth. They're avoiding overpriced luxury markets and instead targeting locations where demand remains strong. But real estate in 2026 is no longer easy money. Mortgage rates remain much higher than they were a few years ago, and monthly payments have become expensive. Property taxes, insurance, and maintenance costs are rising fast. In some cities, home prices are so high that investors are struggling to generate positive cash flow. And unlike stocks, real estate is not liquid. If you need money quickly, selling a property can take months. Now let's talk about stocks. The stock market in 2026 is being fueled by one massive trend: artificial intelligence. AI, automation, robotics, cybersecurity, and clean energy are transforming the economy faster than ever before. Many investors believe we're still in the early stages of a huge technological revolution. And historically, these types of revolutions create enormous stock market winners. That's why smart money continues pouring into tech companies, AI-related businesses, and long-term growth sectors. Stocks also offer something real estate cannot: flexibility. You can start investing with very little money, diversify instantly, and buy or sell in seconds. Plus, index funds and ETFs make investing easier than ever for beginners. For younger investors especially, stocks are becoming more attractive because they offer mobility and scalability. You don't need to manage tenants, fix broken pipes, or deal with maintenance calls. Your money can grow passively over time. But stocks also come with risks. Markets can crash fast during economic uncertainty, and emotions destroy many investors. One bad news headline can send stocks falling overnight, and in 2026, some AI companies are trading at very high valuations, which means volatility could increase if growth slows down. So where is smart money actually going in 2026? The truth is, wealthy investors are no longer choosing just one. Instead, they're combining both assets strategically. Many investors are using stocks for high growth potential while using real estate for stability and cash flow. At the end of the day, the real estate versus stocks debate isn't about which investment is universally better. It's about choosing the strategy that fits your goals, risk tolerance, and financial future. Learn how investing works, think long-term, and start building assets that grow over time.